Hey guys, welcome to my brand new channel, Finance Crunch, where I bring to you finance content that you deserve. Today we're going to be looking at ticker symbol SCR, Score Media Gaming Incorporated, trading on the TSX. Transitioning into the history of the score, we will have to go back to the year of 1994 in Hamilton, Ontario, Canada, where John S. Levy, the man on the screen, and the current CEO of the score, helped create a company called SportsScope. It started as a TV channel that brought sports scores, statistics, news, and live games to the viewers on a 24/7 basis. The SportsScope would eventually be named Headline Sports and then transition into The Score. After developing the channel by expanding their audiences across Canada, John Levy and his associates sold the Score Media's television assets to Rogers Communications in 2012. Seamlessly throughout that transaction, John Levy founded another entity under the Score Media Incorporated, which was pretty much the digital assets of the Score Media. The Score's digital media assets coexist in three categories, one being the most prominent feature, their media app, which was launched in 2007. The launch has been extremely successful as a multi-sports app that averages millions of users that engage frequently with the app. The second segment includes the Score Esports, which bring original video content on online gaming across the web and social platforms. Esports have been trending upwards in recent years, and the Score has inserted themselves into the market. They are most prominent on their YouTube channel, which boasts 1.52 million subscribers. Now, the third sector that I'm going to be talking about a lot in this video is the Score Bet, which is a mobile betting platform that offers numerous features such as in-game data compromising and early cash out, lightning fast scores, pre-game and in-game markets and betting options, and secure deposit and withdrawal options. There's two major reasons why I believe the Score Media Gaming Incorporated is undervalued at this current moment. The first reason being that the COVID-19 pandemic has decreased revenues and earnings in 2020 due to the disruption in the sports schedule. EBITDA loss for the 12 months ended August 31st, 2020 was $30.5 million Canadian versus a loss of $6.5 million in the same period last year. These losses in profit could also be a result of the additional expenses incurred in connection with expansion of gaming operations compared to the prior year. As you can see, in 2020, research and development expenses increased by 270% in 2019. With recent news that a vaccine is on the horizon, you could see a comeback in sports in the year of 2021. This will increase the amount of revenues and profits the company will be able to obtain. But the most important factor for the increase in the stock valuation of the Score will be attributed to the Score Bet and the reintroduction of legislation Bill C-218 in the House of Commons to legalize single-event wagering at the federal level in Canada. The Score Bet is already available in 3 different states, Colorado, Indiana, and New Jersey, and is expected to be available in Iowa in 2021. As you can see, the Score Bet has enormous potential for growth if the legislation gets passed in Canada. They will have a monopoly in Canada and will be the only media company that will offer online sports betting. As I mentioned previously, the catalyst for the increase in value of the Score Media Gaming Incorporated would be the introduction of a vaccination of the COVID-19 pandemic to the public, and also the passing of legislation in Ontario, which both of these circumstances are projected to happen within the next year. The Alcohol and Gaming Commission of Ontario, AGCO, will likely be a key stakeholder in this process. It will be given authority to conduct and manage iGaming in addition to having the role of the regulator. It will be a subsidiary under the AGCO and will be used to manage the role of regulator between the government and the private iGaming sector. With the catalyst that I've spoken about previously, you will see an increase of profitability and revenue from the launch of the Score betting app. The stock is currently trading at 0.71 Canadian a share as I'm speaking to you now, but it could be easily valued at $1 to $3 Canadian in the upcoming years due to the untapped betting market that will be integrated with the media app. The 1-year price target for this current company is at 1.07 Canadian, as you can see on my screen right now. However, there is the possible risk factor that the vaccine will be delayed in the distribution into the US and Canada, and this will impact the revenue and profit in 2021. There is also a risk that the legislation in Ontario will not go through. There's also the risk that competitors could take a significant amount of market share in the United States. But in August 2019, the SCOR partnered up with Penn National Gaming, the largest regional gaming operator in the United States. They entered into a strategic multi-state market access framework agreement that provided the SCOR the rights to obtain online and mobile sports wagering in an additional 11 states. So in conclusion, the competitive factors in Canada and the United States will not be an issue, as well as the COVID-19 vaccination is trending towards the positive side, and legislation is trending towards going through in Ontario courts. Once news comes out that legalization will occur in Ontario, this stock is going to absolutely fly upwards, and highly recommend getting the stock now as it is undervalued. Despite the financial situation where this company has not made a profit in recent history, the upside is tremendous if you can see the underlying factors. Full disclosure, the opinions in this video are my personal opinions, and I'm not a professional. I also am an owner of this stock. And that's it, guys. Thanks for tuning in, and don't forget to like and subscribe.